Marcel Williams here with Elliott Wave Source, #1 source for Elliott Wave technical analysis. Today is September 16th, 2013, and today I want to go over a couple of key pairs, and that's going to be the Aussie dollar, Aussie yen, and I'll just touch on gold as well. So now let's just start out with the Aussie dollar. And with the Aussie, prices have been going as we expected. So as touched upon a couple of weeks ago, this was the beginning of that correction that we have been anticipating for some time now. So we had wave 1, followed by that wave 2. Wave 2 retraced beyond that 76.4% mark. It looks like a 88% correction. And then it found support at that ascending trend line and then took off from that point. So remember, we indicated to go long within a video at this region, and you see, for those that took the long, you guys are reaping the benefits of that right now. But as touched upon, we stated that a 100% move would be towards this 93 level, which prices have rejected over 3 times prior to this move. So we were looking at that 93 level, but we were anticipating a break above, as the correction would then violate the wave 1, would violate our current count. So it would come within the terminal point of wave 1. So we were anticipating a break above, which we did witness. So prices pushed beyond that 93 mark, which gave us our wave 3. So wave 3 is pretty much equivalent to the distance traveled in wave 1. So if we were to get a extended wave, that could be in that 5th and final wave, or we could still be stuck in the 3rd wave and we'll see prices push higher. But as we witnessed, we saw that prices did break above, went to 93.5, so it broke 50 pips above that resistance level, critical resistance level, and then we saw a 23.6% correction that gave us what appears to be wave 4, and then now we're working on that 5th wave. So as stated before, we could see an extended wave within wave 5, or we could still be in that wave 3. But nonetheless, prices appears as if it's gonna give a good entry point to get long, and that would be at 93. So look to go long at 0.93, put the stop loss at 0.924, so a 60 pip stop loss, and then initial targets in this will be at 95. So at 95, you can look to take half off. Then targets for wave 5, if it is indeed an extension, then the targets for that would be at about 98. It appears to be at 98, so slightly below 98. So a move towards 95 would be that extended 3rd wave, so that would give us a wave 3 extension, and then a move towards 98 would mean that we are in that 5th and final wave, and we're just seeing the extension in the 5th wave. So let's just shift gears over to the Aussie yen. And with the Aussie yen, somewhat of a similar picture, and we're going to try to see if we can take advantage of this pair a bit as well. So Aussie yen, for the most part of the year, prices have been pushing down in what appears to be an impulsive format. So we had, as labels, we have 1, 2, 3, which is that extended wave, 4, followed by the 5th wave, and then it appeared that we had a larger A wave completed. So the subwaves of that are 1, A, B, C. Now prices have been resisting this descending trend line right now. So for you guys that want to take advantage, I really do not like to trade the B wave because it's a bit choppy and it's rather hard to predict. But prices are at a good area to get short right now. You can just look for a 100 pip move downwards. So 92.5 with the stops, 92.25 with stops at 92.7. So about a 50 pip stop on that. And then you can look for prices to push towards 91. So you can look to gain 100 pips on this. and then we can play that ascending trend line as well, as prices are also finding resistance at the 50% Fibonacci level alongside that ascending trend line. So that'll be a good area to get long, and you can just look for 100 pips on that as well. So a good area to get long would be at 90.1, and then you can look to target 92 with that trade. But definitely expecting prices to push a bit lower as we are working on that wave B right now within this pair. And finally, the last thing I want to take a look at is gold futures. Haven't looked at this for some time now, so I'll just give a brief update. Now, with this pair, with this commodity, originally we had this area right here, this peak, as our larger wave 1, and then we expected that we were working on wave 3, but it appears the correction that we got was too deep, and it would have violated that count. So we then revise the count, and then we have it as followed: this wave 1 followed by 2, 61.8% correction, 3, 4. So it's actually a 50% correction of the entire move. And then the fifth wave is actually the extended wave, as it equals the distance of wave 1 through 3. Prices have currently found support at the 50% Fibonacci level, but this move was rather swift, so I am anticipating that we are still stuck within wave 2 and looking for a move towards this descending trend line before prices push lower. So at the current time, I'm anticipating a 61.8% correction, so looking for prices to push higher towards this descending trend line, and then it rounds out and give us that deeper correction that we are anticipating and rounds out wave 2. So I'm looking for this pair to push a bit lower after jumping up a bit higher. So that's the video for today. Any questions or comments, definitely feel free to jump in the chat room, and Paul or myself will gladly assist you with anything that may come up. For you guys that are trading, have a safe week trading and good luck.